post recording. There we go. Okay. So let's run through homework. Of course, the homework was the same as the previous night. I just wanted you guys to, again, just keep on building these watch lists because the more you do it, the better you're going to get at it. Right? So it has to be part of your daily routine now of building these watch lists. Even if I'm not going to go over it in the future, which we are still going to do maybe a couple more classes of reviewing watch lists. But even when we stop reviewing, you still need to make a watch list. And to hold yourself accountable, you can even post it up in here every night. Just post up your watch list. It holds you accountable, right? This is something that you need to do for yourself, not me, right? I get it right now. You're probably doing it because I'm giving it to you as homework, of course. But as time goes on and I stop reviewing these, keep on doing it. Just like whenever we do trading journals soon. Once I stop reviewing it, you've got to keep on doing it, right? It's just part of your daily routine. This is pretty much you preparing your business for the day. Like, this is just, it comes with it. All right, let's see. ASNS looked right to you. You'd be looking for the break of $1, then see if it pulls back over 95 and see if it holds. Now with this here, I see you only have the one time frame, Edwin. Did you use a different time frame whenever you were planning for this and you just didn't show it? Or did you come up with this just based on the one time frame? Just based on the daily chart? Did you use multiple time frames? You did. Okay, I gotcha. Can you post it in Bootcamp chat on WAP? You can. Yeah, you can. It might be easier to post it here since we have the stream here, but whatever's easiest for you. You kept thinking it was about to get going and it never did. Was this Alto? I want to talk about this if it was. I see ALT. Oh, it was Alto. Okay. Do you know why this is a problem, though, on Alto? We talked about it a little bit this morning. You know why you're getting bad reads on stuff like this? Do you know why you're getting bad reads? Yeah, float. It's just not the right stock. It's just not the right stock. I saw somebody else do the same thing today. It's just not the right stock. Right? These larger float names, it's something we talk about a lot. It doesn't matter how good it looks. If it's not your stock, it's not going to trade well, right? You're not going to get good reads on it because here's the thing. You have programmed your mind into trading a specific type of stock, and you see this every day. Your brain is not used to trading something that trades this wide. Look at this. And these larger float stocks are very grindy. They're very wide in the way that they trade. And that's why I don't trade them. Your risk to reward is typically far less. And of course, you have to deal with a lot of this chop and a lot of this grindy price action. It's not fun, it's not easy, and it's not predictable to trade. Right? So while it might look good, you've got to ask yourself if it's the right stock. Yeah, no, post it in here. You can also post it in Bootcamp Watchlist. You guys can see this channel, right? If not, I'll unlock it after the stream is in, after this one is over with. But let me know. Can you see this Bootcamp watch list? If not, I'll open some of these up. I'll unlock them after the stream ends, and you can post these up all up through here, and you have no worries about cluttering anything. But let me know if you can see that. Let me know if you can see it. You can see it? Okay. Can you type in there? Give me a little test in there. Make sure you can type. If not, I'm going to go in there after this class is over. But yeah, like I said, again, just to hit on this one more time, when it comes to the overtrading, when it comes to forcing and chasing, before we get started and go over the rest of the homework, which I think we have quite a few here to go over, yeah? You can't type? Okay, I'll get that fixed. I'll get that fixed for sure. But like I'm saying here, whenever we're talking about that Alto, all right, with Alto and just anything that's not in your playbook, it's like, I always use this analogy. It'd be like, Tom Brady trying to play in the NBA. Like, it's not what he's good at. It's not where you're going to get the best results. You're probably going to get dunked on. You're probably not going to see very good results. You're going to be frustrated. You're going to get chopped around. The thing's going to juke you out. I mean, you've got to trade what you know works for you. And so for me, like I said this morning too, you've got to figure out what time of day do I execute best? What float stock range do I trade best? What share price do I trade best? What setups do I trade best? And you've got to figure all that out and dial your strategy into where you're only doing what works best for you with everything. I'm talking share price, float, time of day, setup, confluences. I mean, you have got to look at the data and see, where do I make the most money? Where do I lose the most money? And just do what makes you the most money, and just do a whole lot more of that. When I say a whole lot more of it, I don't mean take more trades. I mean take more size on those trades and cut everything else out. Right? You have stuff like this on Alto. You have stuff, that just aren't quality setups. And I've seen a lot of people chasing and forcing and Again, when you just have to cut the noise out, you'll make so much more money. Right? You'll make so much more money. Whenever you pull up a stock, ask yourself, is this the right stock? Let's look at the float. 71 million share float. Sure, share price is fine, but 71 million, okay, let's leave it off. No, thank you. Right? No, thank you. What made you unable to step away? Real quick before we get started, because we're gonna have plenty of time tonight. How many of you have a hard time stepping away and you end up giving back profits? A lot of you, or no? Is it a common thing for a lot of you? You feel like you can't walk away and you keep trading and eventually you give it all back? Because I've seen that a lot this week. You shut down fast. Okay, well, that's good. That's good. It's typically the opposite. And it was for me for the longest time. I had a hard time stepping away. You'll be happy up 2R and bounce. That can be tough too, though. There's a good and bad to that. There's a good and bad to that. If you take a couple trades and you walk away, but then on your tougher days, your red days, then you sit around for the whole morning and keep, so it can go both ways. Yeah, it can definitely go both ways. But the biggest thing that I can say, and then we'll go over homework, I promise. I know I'm getting off track, but I just think this is so important. It's more important than any of this. If you have a hard time stepping away, all you've got to understand, look, we've got to take a step back and zoom out. And I think the reason why a lot of you sit around is, yes, it's greed, but a lot of it is compensation, like we talked about on stream today too, is you're compensating for a lack of proper execution. I say this so much. And it is greed. It is greed, but you think the market owes you more money because you traded the setups you did have poorly. So like this morning, for example, on GXAI, let's just say, for example, that you traded this terribly. I mean, you traded this terribly, and you did not have a good day trading this today. And you panic sold, you chased, whatever it was. And then you say, well, shoot, now I've got to go trade something else, and I've got to try and make some money somewhere today. So then you go over to ALTO. And then ALTO turns into TPET in the afternoon. And then you go try and trade BATL in the afternoon. And then you go try and trade this in the because you just feel like you need a paycheck, despite your improper execution. And so this is why years ago I put in place my time schedule that I've got, my small window of stocks that I will trade that meet my exact criteria. And if it does not meet that exact criteria, if I do not have the perfect setup, I just don't trade it. That's why you'll hear me on stream so much saying, yeah, I don't really like this. I'm not really a big fan of this. This looks bad. This looks bad. This looks bad. If I see a single red flag, I'm not trading it because why would I? The market doesn't make me trade anything that is not perfect. So whenever you limit yourself to a specific time window and you say, well, nothing's really looking good. Everything's sort of breaking down. Everything's sort of choppy now. I'm going to step away. Maybe that's 10:30. Maybe it's 10:45. Maybe it's 11. Of course, in a colder market like we've had, 10:30 tends to be when I shut down. But you just have to be like, okay, I've had my chance. If I didn't execute well, come back tomorrow, do it again. You just have to zoom out and just look at the big picture. But that's really what it is. It's that compensation. You feel like you're owed more from the market, really is what it is. You get bored, nothing's moving, and you start, yeah, exactly. That's what it is. That is 100% what it is. You've got to be thorough with everything you look at. And the truth is, too, the stocks that you find before market opens are the ones you're going to execute best on. For one, yes, you're more thorough in how you look for them. You're more thorough in how you plan for them. So you've got a whole lot more conviction. And they're typically higher quality setups, too. But those boredom trades, those things later on in the morning that, again, just randomly pop up can sometimes look good. But most of the time, again, it's just those boredom trades. So anywho, enough of me yapping, but I think it's something that we need to talk about a whole lot more. And it's really, yes, we can talk about the watch list. We can talk about, technical strategies that you can put into play. But the bigger piece of all of this is discipline and doing a whole lot less than what you're doing right now. You do a whole lot less of what doesn't matter and a whole lot more of what is making you money. That's where you really make a whole lot of money in the market because you build up so much confidence. You know what you're doing works. You know your strategy works. You know your setups work. And from there, you can just trust the process. But again, that's from doing a whole lot less. Doing less, making more. All right, so JZXN, watch for break of 167, watch for pullbacks for price to confirm range 225. This is a good setup. Yeah, good job. Because you also have the break of the 50 moving average. Yeah, good. Good job, Mr. Tim. Good job. I didn't skip this one, did I? No, I didn't skip this one. Mike, what you got? What you got? Price action here, not great. What is this on here? This is on CDTG. Notice how choppy and illiquid this looks on CDTG. Did it really look like this? I don't recall CDTG looking like this. Why does group... Did it really? Or was that after hours? Oh, where were you looking at this? Let me see. 13, 14. Okay, so you're looking... I'm so confused here. Oh, I see. Okay. So I see the issue here. Turn on EXT. You don't see after hours is the problem. You don't see after hours because see, whenever you posted this chart, this was at 9/11 yesterday. This was already at like 50 cents whenever you posted this, right? So this wasn't true price, right? So you're saying to watch it for the break of 38, but this was already at 55 cents. So make sure you have EXT turned on your intraday charts. Let me see if I missed any chats here. You have moments where you see it and it works, and I'm like, yeah. Then moments you need an high drip. Okay, well with that too though, do you guys ever like you pull up a setup and you just know it's the right setup? You ever feel that? You pull it up and it's just like it literally slaps you and you just have so much confidence, like you have this urge to take the trade. Like in a good way, not in a FOMO way, but like in a confidence way. Not in oh my god, I'm missing out. You do? And how do you do on those setups? Typically. How do you do on those? Do you do well? Do you make a lot of money? At least more often than you lose? You crush them? Why don't we just do a whole lot more of that? Like, imagine if that's all you did and you just used more size on those trades and you did none of the other stuff. Imagine, like, no more frustration. Sure, there's some days where you're going to be frustrated, but just imagine if you would just do a whole lot more of just that. Like, you only took the trade. This is what I do. Unless I look at a trade and I instantly say, wow, I need to trade this. Like, this is just an amazing setup, so much confluence, perfect setup. I'm not going to touch it. I'm not going to touch it. Otherwise, you just get chopped around doing a whole lot of stuff that it doesn't matter, right? Stuff that does not matter. And you know it works for you because your brain is a lot smarter than you think. It knows more than you do, right? If you pull up a chart that you've personally found success with in the past, what do you think your brain knows? Hey, this setup made me happy a lot in the past, so it must be a profitable setup. It must work most of the time. You know it works. Your brain knows subconsciously. It's pretty crazy. You just have to listen to yourself and trust whatever feeling you feel inside of you whenever you pull up a trade. And if you ever hesitate, you're hesitating for a reason. You know exactly when that good setup is there. You just have to listen. I know that's deep, but you just got to listen. Again, same here in AIFF. Make sure you have EXT turned on because these charts are all going to be, they're all going to be way off. Because if you look at AIFF, let me show you. All right, you've got to make sure you have EXT turned on. Because, see, this is actually popping here in pre-market. Now, of course, I know this was from yesterday whenever you put it on your list, but even then, there was some pre-market action or after-hours action. So just make sure you've got EXT turned on because it will, I mean, really change the setup entirely, and it will change your plan entirely. Exactly what you're saying is what you realize you need to do. Yeah, exactly. Exactly. When you do that, I promise, it gets simple. Now, it's never easy, and I can't tell you it's going to get easy, but I can tell you it gets so simple. GEMI, the break of the 50 moving average. This is good. Nothing wrong with this. Nice strong close. Looking for the break to second day move. That's good. What was float on that, by the way? Made a nice move today, too. Did you play it? I assume you didn't play. I think float here was kind of big. It worked out, though, and the game plan was good. 16 million share float. Not bad. Yeah, you could have played this for sure. How was the 1 minute? Volume looks a little bit low. Yeah, volume a little bit low, but good setup, though, nonetheless. Good job. It's just like something like this. I can just see this and just know it was going to work out. It's just a good setup. CDTG breakout over 65 and not break down. So you're looking for confirmation then. Okay. For the range of 76 and 90. Let's see what you got. Okay, so this is good, but the problem is I don't think you utilized your lesson on supply and demand. So I wanted to pull the chart up and see what we had here. But see, whenever you look at it this way, what do you have? You have that big reversal off the high, big wick off the high. That is supply. So we can assume that if price breaks above out of this wedge, we can look for pullbacks out of that past area of supply. This is now demand. Otherwise, you get faked out trying to take the break of 65. It pulls back to retest. Then you get stopped out and makes the move. Anytime you have these big wicks off the highs, go ahead and drag your little rectangle there. Does that make sense before I go forward? Let me know. Let me know. But utilize that lesson. I know. Oh, here we go. Yeah, good job. Good job. What you got? Marked up your wicks perfectly. Again, those big reversals are where you want to look at. AIFF, you're looking at the break of 189 for the range to 215. Okay, so I don't love that. Do you know why? Can somebody tell me why I don't love this over 189 on AIFF? Look at the daily chart first. Again, look at this first. And I'm going to, again, change how you think about this too. Look at this first. Tell me what's wrong with the break of 190. What's wrong? No range, right? No range. But so look at this. Look at this. Look at this. If we cover this time frame on the left entirely, we don't even look at this. If you only saw this, hear me out here. If you only saw this, would you still agree with the break of 190? Yes or no? If you didn't even see that left chart, yes or no? What do you think? No. Oh, there you go. There's your answer. There's your answer. And I think whenever you're trading too, you're going to make the same mistakes. And again, this is going to also cause those issues where we're talking about lower quality setups. If it's not good on the daily, I'll find myself doing it at times. I'll make a mistake. You're never going to be perfect, right? You're never going to be perfect. I do stuff that's wrong all the time. The fact is, you just have to do a whole lot less of what's wrong. So in situations like this, where you look at a daily chart and you're like, well, you know, the intraday chart looks good, so I'm gonna plan it anyways. The daily is hands down the most crucial, most critical, most significant time frame you have in your arsenal. It has got to look good on the daily chart. If it doesn't, it's not a good setup regardless. So this doesn't even matter. So ask yourself first, is this a good daily setup? If not, leave it off. But that's top-down confluence, right? That's top-down confluence. This is good. Price action kind of crazy, as you can see, but the plan is fine. You have the break of the 50 moving average. Range to 2. Little pivot off the highs. Yeah, nothing wrong with that. It's good. Good, 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 good. IBO, what you got on IBO? Look for a simple reclaim of VWAP with range to 1 in 120. I like this because you said 1 because it's a psychological level. Good job. Good job, good job. CXAI, man, you are loving the supply and demand stuff. I love it. I love it, I love it. Oh, I skipped Turb. What do you have here? So this is, let me pull up the chart here and I'll show you. Where were you looking at this? You're watching it over 273. I'm trying to get my chart marked up just like yours here. So I see exactly what you're looking at. Yeah, you did have range though because you had room to 340. 340, then up into, where did you have next? 330, 450. I'm assuming you cut it down the middle, use the psych level. Gotcha. Nothing wrong with that. Yeah, that's good. That is good. And again, look at this. Great use of your pivots. Great use of your pivots. CXAI watching over the 50 moving average. Range to 45 and to 60. Yeah, it's good. Good job, Denver. GZXN. This is also good. The only thing is, again, like I told him, or like I told Nick up here, make sure you're getting good practice with drawing out these areas of supply and demand, especially for breakouts like this. The thing is, the reason why breakouts create so many losses, so many fake outs, is because people aren't trading them based on liquidity, right? Areas of supply and demand, areas of liquidity. You know, anytime you take a trade, the question you ask yourself is, I'm sure you guys have heard me say this before, am I liquidity or is somebody else? I want to be trading with that liquidity. I want to know where it's at. I want to trade those pullbacks back into areas of liquidity after price confirms, not just taking a breakout. You take a breakout, you're going to get faked out 90% of the time. All right, 90% of the time. AIFF break over 189, range to 213, 189 breakout, range to 213. Again, same story here. We've talked about this, not quite enough range. CDTG over 49. Where are you getting the 49 from in this case? Range to 60, 75. So the only reason why I don't like it here at the 60 cent, or what did you say, 50 cents? Over 49. So I don't like that. The reason why is look at these big old topping tails here. Look at these big topping tails. Essentially buying up here over 50 cents, you'd really be buying up into these sellers. Right? You've got so much selling pressure all through here that you're pretty much inviting yourself to buy up into. Right? If sellers have liked it here, here, I don't want to buy up into those sellers, right? We again have to understand where we have buyers and sellers sitting in the market, and again in here you're almost inviting yourself to become their liquidity, right? They obviously love to sell it through here, so you're buying up where they like to sell it. Again, you're just sort of fighting the winning team there, basically. They have the home field advantage, so you want to wait for the break above those sellers, right? DFSC was this much volume on this? DFSC. No, there wasn't enough volume on this. See, look at this here. You zoom in here, and like we've talked about, this is on a 3-minute time frame here, and it's this choppy. But again, ask yourself, is this price action I want to be a part of? And like I always say as well, if price action looks like this on the day of its move that you're looking at for your watch list, it's not going to look any better on the next day, right? It's not going to miraculously get better. That's just how the stock trades. It's unlikely to trade much cleaner. Same story here with, what stock is this? WFF. Look at this as well. Again, same exact story. Look at this. What do we call this, guys? It's barcodey, right? So it's not a good opportunity. We don't want to be trading something that is barcodey as all get out. There's no way that you can really do much with this. There's no way you can really do much with this. It's just not an opportunity. Good levels, though. It's just a matter of looking at stocks that you're going to actually be able to trade. Break of 240, pull back to 220, range to 310. Where is this 240 from here? Daily chart. It's a large move it would have to make. I suppose if you were going to trade this, that's how you would have to watch it, though. So I can't fault you for that. It's very unlikely to meet criteria just because it is so far from current share price, right? Because here's the thing. This is $1.50 a share. You're saying it has to break above 240. That's a whole dollar a share move. And for, of course, a $2 stock, that's significant. So it's unlikely. And the fact is, too, let's think about this. If you're planning for this the next day and you've got, let's just say, a breakout level of 240, share price right now is $1.50. If this did, right, if this did break 240, well, guess what? It's overextended, right? It's overextended. So again, even from there, it's, all right, let's see. So it wouldn't really be in play there. CDTG, what are you looking for here? The break of 57. Okay, why do we not like the break of 57 here? Yeah, let me know. I want to keep on drilling this because, again, like we talked about on Tuesday, supply and demand. Y'all should be practicing this really heavy with this homework and really with your watch list, with anything you're doing right now. Again, it is how the market moves. It should be the basis, the foundation of your strategy should be supply and demand. Identifying areas of liquidity. That is how these things move. So what do you think? What's wrong with 57? What do you think? No range overhead supply. There you go. Yeah, overhead supply. I like the use of the vocab there. Good. Yeah, we have sellers sitting overhead, and again, you're inviting yourself for that break of 57 to buy directly up into where we've got sellers sitting. They're all sell, 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 and you're trying to buy up into where they're sell, sell, selling. I want to see the break above first, and then we can look for, again, buyers to take control on pullbacks. All right, we got to clear that first. Otherwise, you go buy up into supply, and you're going to have a you're gonna have a bad time. Gonna have a bad time. Levels are good though. Again, it's just a matter of again just making sure we're identifying where that again relationship between buyers and sellers sit and planning around that. Good. Same story here. We talked about those wicks off the high. You can definitely, again, this is sort of a grab of liquidity off of 167. Again, so we can actually grab that wick off the high like this and sort of use that to our advantage on a breakout. If price was to pull back and retest that area of liquidity, because this is a grab of liquidity. See how it broke this high right here and then it instantly rejected? Right? It grabbed liquidity there on the break of the high of day. So you can actually just drag that over. And we're going to talk about a lot of this today too. CCHH, this is fine and this works. Again, similar story here though. I would like to see, right, see these big wicks off the high. Let's just grab that. Let's grab that because that is, again, the market grabbing liquidity out of this price range. We can actually use that to our advantage again here as well. Again, this area of supply, price confirms above, becomes an area of demand, right? So again, you're looking for swift reversals. You're looking for swift reversals. Let's see. AIFF, same story here. Are you looking for the breakout as well? Get going above 150. You're looking for pullbacks. Yeah, you're looking for pullbacks over 150. We're actually looking for a breakback above 150. That's interesting. Are you looking for the break of trend? What do you have here? Yeah, you're looking for the break of trend. Okay. I see. Yeah, that works. No, that works. That's fine. You'd have room. I was going to say we're sort of up into supply, but if you did get the break and you're able to take some pullbacks, I'd like that. Of course, I wouldn't be taking a breakout up into that, but if it put in place a base, you could take pullbacks. That's not a bad setup. Yeah, that's good. JZXN reclaim of the high of 167. Okay, so break of the high, then you'd be looking for a pullback. The range to 210 and to 28. Levels are good. GEMI, watch for price to get over the 50 MA. Good. Good. If the price drops below this level again and begins to rebound, this is the entry range from when momentum is with the buyers. Confluence of E up 9 over 20 EMA. What is this? BATL. So here's the thing with a stock like this, and I think this is great to touch on. With BATL, again, this is something that I really want to drive home tonight too. On a stock like this that is a multi-day runner, should we be using a 5-minute time frame? Why or why not? I'm gonna give you a second to answer this because I want to go. This is actually a great lesson, so I'm really glad that you posted this. Should we be using a 5-minute time frame on a multi-day runner? This thing's been running for 1, 2, 3, 4, 5 days now. Just about. So what time frame? This might be a bit of a trick question, but what time frame should you use on a multi-day runner like this? What do you think? What do you think? I'm curious to what you guys are going to say. I'm going to give you a minute to answer this. But what do you think? Let's see what y'all think. Yeah, so Bobby, here's the thing and why I want to talk about this. What you trade them on and what you analyze them on are completely different. And I think that's where the confusion came in. Is that what it was? I assume. So whenever you're actually trading them the next day, of course, and you're trading them in the moment, you're analyzing in the moment, of course, yes, you'll use that time frame. But whenever you're analyzing, we've got to see the big picture. And so the trick question there is not that you're using a 15, an hourly, a 30-minute. We've got to use a time frame that allows us to see the full move. Like if we're looking here on BATL, let me show you why this is so important. If we're looking here on BATL, To see the full move, I've got to get zoomed out to like a 30-minute time frame. So I can see the actual big picture, right? The big picture of the move, what's actually happening, true trend, right? The overall trend of the move, I can't see unless I get zoomed out on a larger time frame. Does this all make sense? Let me know if so. Again, this is really important because, again, otherwise you don't really get a good idea of trend. It helps a lot. Okay. Yeah, no, of course, whenever I'm trading, I'm not going to trade this on a 30-minute time frame. I'm going to be using my 5, my 1, my daily, of course, as always. But to see the big picture, again, you get a much better idea where we actually have that supply, where we have demand, right? Where we have that break of trend, and so on and so forth. So you get a much better idea of what you're looking at. Of course, the daily is still king, but again, you see the full move here. Cool. A lot of scrolling, exactly. And with the scrolling, you're only going to see bits and pieces. At least with this, you can see it all right in front of your face. But yeah. So do that. It'll help you a lot. All right, what else you got? Look for price to stay in the range and break above 105 for entry, range to 135 and 2. And you're looking at it over 105 for entry, range to 135 and 2. Let me look at see what the importance was of 105. The high was 107. You're looking for a break of 105 for entry, range to 135 and 2. I'm assuming break of the high, room to 135 and 2. Let's see. $135, I see where you got that from. All good. Yeah, it's fine. GXAI break above 275, range to 374.40. So in this case, I almost prefer the break of the high here. We sort of have, right, at this point, you'd be buying sort of 20 cents over the high of day. You could really look for, let me show you here. Right, so we have supply sitting off the highs here. Let me draw this a little bit better for you so it's not so hard to see. You sort of have the supply sitting overhead. Notice how price continues to test this range, rejects, right? It pops up into the range, consolidates, reverses, pops into the range, reverses, pops, it just keeps on rejecting. So we actually have heavy supply through this range. And so what you could actually do is look for a breakout, look for price to confirm back out of that past area of supply to now, of course, become demand. And that works on the daily chart too, because right now you do have these lower highs. So if price did get breaking over the high of the day from today, you'd also be breaking out on the daily. So that would all be all fine and dandy there. And of course, you do have range to 370 and 440. So that works too. That works too. Break of overnight high. Room, let's see what you got. Play of VMA's room to 120, 140. Okay. And what else you got here? NAGE break above VWAP, confirm bottoms. 680 to 720. Let's see what you got. All good. So on a confidence level, let's compare it to Tuesday, whenever we did the watch list. On a scale of 1 to 10, how much more confident do you feel tonight with your watch list compared to then? Compared to Tuesday. As long as we're over 5, we're progressing. A little bit better, a lot better. A little bit better. Well, that's good. Now, the more you do it, the better it'll get. You just have to do it every single night. Every night. Just make it a routine. It's a routine for me every single day. I see that clock hit 4:30. I say, well, time to start diving into the charts. Usually have my watch list done by about 5:30. That's just my routine. Then it's dinner time. It's time to wrap it up. Wrapping your head around supply and demand. Yeah, we're going to dive more into that tonight as well. We're going to actually look at some examples from today on GXAI, and I'll, of course, pull up a few examples on some others as well. But the big thing is, let me show you this here. Your mind is going to be blown. You're going to say, oh my goodness. Because our game plan today on this was actually using, Let me show you here on the 5 and the 1. It was actually using pre-market supply, and it was a great setup today too. Okay, check this out. So this is a really classic example of a supply and demand sort of pivot, right? It sort of flips, right? Look at this. So back here in pre-market, what happens? Well, let's take a look. We have this massive move to the upside here from $1.25 to about, what, 210 on news. This is the stock that had the drone news this morning, drone defense contract news. And so we have this big move to the upside, and then it does what? It puts in place this big topping tail off the high. Then guess what? It tries to curl again on this next candle. Look at this. It opens here, pops back up to the highs, and it sells off again. Okay, so now we know again, sellers are here too. Okay. So I know here that there are sellers and sellers sitting through this price range. Again, it's all about just keep it simple and just look at the chart and ask yourself, what's going on through here? You can see the same thing on the 1 minute chart too. Look at this. 1 minute chart, massive move to the upside, consolidates, reverses to the downside. It curls back, right? Retests the highs, and guess what again? Topping tail off the same high. And so again, sellers here, out of the same price range. And so I know this is what? What is this? This is supply. So again, we can mark this up, grab that wick, make it look pretty. And so what we actually have here, I want you to check this out. A little bit more accurate there. Okay. So as price breaks above, look at this. As price breaks above, I hope I actually grab the correct wick. There we go. As price breaks above, what is currently supply, price breaks above, clears out those sellers. What I then want to see is price pull back and confirm, because now this is no longer supply, this is now demand as price breaks above. So I just want to know, where do we find some area of significance in terms of buying pressure, selling pressure, some sort of rejection, whether it's to the upside or downside. Just like here off the highs, we have this big leg to the upside, then what here? What happened here? I mean, it's just a matter of looking at the chart and asking yourself, you understand more? Okay. Yeah, this should start to make more sense. I mean, what happens here? We reverse all the way back. Look, okay, sellers came in. So again, I understand, okay, there's sellers here. Cool, okay, easy enough. This is supply. Right? That's supply. That's supply. And then all of a sudden, boom, you have the range in between it to trade out of. Look, easy, easy, easy. Supply. Supply. Price broke above this. Now this is demand. This is still supply. Until price breaks above. If it breaks above, then it becomes demand. Right? And so on and so forth. All right, so this is your, again, supply. This is your supply. Price breaks above here. That's your confirmation. As it breaks up in a strong way, now this is demand. I can look for pullbacks. Okay, good. Good, good, good. Again, this should not be too confusing. It's just one of those things you gotta keep on looking at. You've got to keep on looking at. So check this out. And if you were on stream this morning, my entry here was right here. My entry is right here this morning on GXAI. And you can really see why that was. You can really see why that was. Let's see what confluences we had. Check this out. So for one, we had the break of trend from pre-market going into the open. Look at this. So for one, we had these lower highs, lower highs, lower highs, lower highs. Broke out after market open, where we actually knife out of the bell. It pulls back underneath, right? And it becomes what? Look at this. It's respecting, respecting, respecting. But of course, we can't play it here because for one, you're stuck in a downtrend, and two, underneath all of your EMAs, and three, underneath VWAP. So of course, can't do anything there. Can't do anything there. So this is not currently valid. We don't have confluence. We knife out of the open. And what happens? We've got to ask ourselves these questions. Build a story out of price action. All right, this is what I always say is you've got to build a story with price action. What's going on? Don't just look at it from the surface level, but actually look into it. Think outside the box. What's going on? Okay, well, it tried to sell off at market open. Look at this. It tries to sell off at the open. And then big buyers step back in and say, wow, we're not ready to go lower. They reclaim your EMAs and VWAP, right? They break back above. And now again, this area of supply, which was formed again, right? Because price broke back below, so it became supply again. But then it reclaims, breaks back above. Now it becomes demand again. So this is now demand. You've reclaimed your EMAs. You've reclaimed VWAP. You've reclaimed, right, the overall structure of the market. We've broken trend. So you've got all of these pieces of confluence. And then what? Look at this. We pull back to retest, right? You never want to go chasing, but we pull back to retest. And what happens? This candle gets bought up. Look at this wick off the low. This candle here gets bought up off those pullbacks after retesting this area of demand right off of, look at this, right off of VWAP. Next candle pulls back. I take my entry right here. Because the market told you everything you needed to see here. There was so much confluence. Look at this. One more time. The break of trend. This area of supply, of course, had become an area of demand. We reclaimed the EMAs, reclaimed VWAP. And the market told us, hey, we're not ready to head lower. It told us that right out of market open. It tried to sell off. It got bought up aggressively. Nailed the pullbacks after confirming higher lows back out of this area of demand. Then, of course, we knew we had range towards this, 235, 250 from pre-market. So it's all about just putting every piece together. In this case, we had how much pieces of confluence? We had supply and demand, right, that flipped. We had the EMAs and we had VWAP, so that's another 1 and 2. We had range back to pre-market highs. We had the break of trend from pre-market. I mean, we have so many pieces of confluence that made this an awesome trade today. Took the break of VWAP, or pullbacks off of VWAP, yes. All right, pullbacks off of VWAP here. I took it right here. So I didn't take the break of VWAP, I took it here. You didn't understand it. Do you understand it now? Does it make more sense? There was a lot going on, but again, that's just, there's so many pieces of confluence. Just understanding this, starting to recognize this feels like a game changer. It is. It is every little piece of confluence you can add to your arsenal. Of course, as long as it's not noise, right? There's ways you can add noisy confluence that doesn't do anything but harm you. But does this make sense? At least a little bit. I know it's not going to be crystal clear because there's a lot going on. But does it make a little bit of sense? Right? It's all just about piecing every little piece of that puzzle together. And just like we talk about with time frames, about why looking for multi-time frame confluence, why that's so important. Well, why is this so important too? Why is this so important? Well, it's so important too because guess what? You've got some traders that only trade breaks of VWAPs. I know you're like, well, who does that? Well, unprofitable people do, but that's fine. They're your liquidity. There's people that only trade the break of trend. Right? People only trade the break of trend. People only trade supply and demand. People only trade reclaims of the EMAs. And so, again, whenever you have all these traders that are looking at this indicator, this indicator, this indicator, whenever we have everything aligning, we have every time frame aligning, every piece of confluence aligning. That's what we're looking for. All right, so the more confluence we have, the better. But again, this is a setup right here that I looked at this morning, and I just knew I had to take it. We can even look over here to MTEK this morning too, which I don't think was really a supply and demand based trade. It really wasn't. No, it really wasn't. I guess in a way we could sort of say that it sort of was. You can sort of see what happens here, and I might even go down to a smaller time frame to show you. It's hard to see price action being this move happen so quickly. Let me see if I can see it on the smaller time frames. Yeah, so you can actually sort of see it here. In a way it was. You can sort of see it here a little bit better where it rejects off this high. You can sort of take that flip whenever it confirms the breakout, but I'll sort of try to explain here on a 1 minute chart with MTEK. This is the one that I caught this morning from, I think it was what, 235 to like 3 or something. It was a pretty big trade, but the thing is, again, look back here, and there's even 1 minute, sort of these 1 minute flips too. We have this high formed here back early pre-market where it's, again, sort of in a range, right? And this is sort of a tough example, but it still works for all practical purposes. It does still work. Consolidation, which of course, we've talked about this before too. Again, what happens before the breakout is more important than the breakout itself. Can somebody tell me what this creates? That consolidation prior to the breakout. Okay, volume shelf, cool, good. Okay, so it gives the breakout something to base off of, right? So as it gets breaking out, here's the thing. It tries to break out on this candle here, but what happens? It tries to break out, sellers come in, and it closes beneath that previous high. Okay, so I saw that sellers liked it here. Okay, so cool. I've got to break over that high. I've got to break over that high. And so what I can then tell myself is we can just say we have sort of supply sitting through here. We have sellers sitting through here, and you can visualize that like this. That works too. So what I'm looking for is a break above, a candle close above, right? I'm waiting for a candle to close above this rejection candle. And so I waited for this next candle to break out over this high and close above. And then what did I do? I took a pullback. I took the pullback right here. As soon as that candle opened, I took the pullback for the extension higher after we confirmed over this recent candle's rejection. And then, of course, where does stop loss go? Well, bottom of the breakout candle. So guess what? You're entering what at 235, stops at 227, roughly 10 cents a share of risk if you want to round, you know, for the range to 3. You know, so you have entry 237, stops 227, range to 3. I mean, that's, you know, 6 to 1 risk to reward. You know, it's no joke. It's no joke. But that's how I traded this morning. Again, a pretty similar idea where you're really just asking yourself, where do we have buyers? Where do we have sellers? I know I've got sellers sitting here, so I've just got to look for the confirmed break above. You know, then I can play the breakout. You like that? Good. Good. Yeah, no, this is, I'm telling you, whenever you look at things deeper past that surface level, it all begins to make sense and how things really move and how you can start avoiding those nasty fake outs. And now, mind you, too, I took a trade here this morning for a loss out of market open on MTEK, a quarter size play. I had my win here. Then I had my win here. I played it from, what, 237 to 280s, and then I played it from 270s back to 3. But then I took a quarter size loss here. And I'll tell you, in hindsight, it wasn't a good trade. It wasn't a good trade. And so while I only took it with a quarter size, I risked a little bit of my profit to see if I could make a little bit more. But it just wasn't a good setup. And the reason why, I'll show you. All right, just to show you that I make mistakes too. You're always going to. We have this big topping tail off the high that I was, in my mind, going to look to try to retest that high. But the fact that this was such a large topping tail that pretty much engulfed everything, right? It pretty much engulfs everything. Not really a great setup. You know, and so for me, I look back and this is a case where even I had a lapse of judgment and missed something. It's going to happen. And that's why I want to just drill too that if you guys ever feel like you missed something, you don't read something perfectly, you make a mistake, you took a trade you shouldn't have, it's always going to happen. You're not going to take perfect trades every single time. Right? But it's important that you at least realize that way you don't do it again. Or at least do it very few times. Right? At least do it very few times. Or at least take appropriate size whenever you know it's not a perfect setup. Like for me this morning, I took a quarter size trade on it after I think I was already about a 3 or 4 hour day by that point. So I was risking about 15%, 10% of my profit on the day on that trade. And, you know, it just didn't pan out. But it's one of those things. Did it not bring concern? Oh, yeah. Yeah, it did. It did. So that's what I'm saying. I took a small amount of size and I tried to get it to work. And, of course, it was a losing trade. But, yeah, it definitely brought concern. Now, of course, if you're asking about this entry here, it did not because, of course, this wasn't here yet. But we actually got the move here from 275 to about, you know, what, 315, 316. But, yeah, so that was that. After that, do we have anything else that we can look at in terms of course, you can see how this was respected here off of this area of supply. Look at this. I had somebody this morning in chat too. You know, we're looking at this on GXAI, and you've got this breaking out over the highs here, right? And you've got a lot of people that go and chase stuff like this. A lot of people try and chase stuff like this. But see, whenever you recognize, because here's the thing, look at this. A lot of people out there trade with trend lines. Then you look at this here and you're like, wow, this is a clean setup. Oh my goodness. Take the break of trend here and look for the squeeze. No, whenever you understand here again how to identify supply and demand, look at this. This is just a little pop up into this pre-market supply. And guess what happens? This thing pops up from 215 all the way to 240, then reverses all the way back down and gives back everything in the same candle. Less than a minute. In less than a minute. And again, this is why supply and demand is so important. Look at this here. Happens again. Happens again. And I bet somebody here got crushed too. Look at this. They're like, oh my goodness, I'm taking the perfect breakout here. And all of a sudden they get slammed back through lows because they're buying up into pre-market supply. IBO, yeah, we can look at it. It might have been a good example. I think it was, yeah. Yeah, it was a good example. Thank you for reminding me. This was a good example of, again, the same exact thing. Look at this here. Check this out. So what we actually had happen here was a perfect example of, again, supply and demand. Wicks off the highs. Look at this. As it's trying to, again, break VWAP, what's happening? Look at this. Keeps trying to break VWAP once, twice, and 3 times. Big wicks off the highs every single time. Okay, well, we understand that is an area of sellers. Supply sits through this price range. Well, guess what? Price breaks above. This area of supply becomes an area of demand as price breaks above. Price pulls back. Confirms off of your EMAs and VWAP. Possible opportunity here. Risking off the bottom of the zone where price just confirmed bottoms. Right, for the move back higher. So yeah, this is another good example. All right, another really good example. My take on MOBX, what have you got here? I think this is also a good example that we've actually looked at from, yeah, no, this is also a great example of it. If you haven't marked this up yet, I'd like for you guys to do it so I can actually see if you can spot what I'm looking at here, because this is a really clean example. Go on the 30-minute chart for me. I'm sure a lot of you already marked it up, but if you haven't yet, with my watch list, because it is on the watch list for tomorrow, but if you haven't yet, I want to see you mark it up. Or just clear off your charts and do it yourself. Pull up MOBX on the 30-minute. And I want you to tell me how you'd have to play this tomorrow. Use the daily too. Use the daily too. Get your, pretty much like it's a watch list setup. Just analyze it like you would a watch list. Pull it up. I want to see you do it. It's just so clean. I feel like it's a great example. I'll give you until, what time is it? 9 o'clock. Have the full plan and how you'd have to play it by 9:03. So do you only go back and recognize pre-market supply if it was in that range that same day? I'm not following. Could you elaborate? I might be missing what you're saying. Do I only go back and recognize pre-market supply if it was in that range the same day? How far back would you have to go? Yeah, so you, exactly. If it's intraday supply, you would just look at the same day, yeah. Or the relevant move, like we talked about earlier with, what was it we were looking at? BATL. Earlier on BATL, just make sure you're looking at the big picture or the whole relevant move. Like in this case here in MOBX, notice how I'm having to zoom out some to see, you know, price action from 1 to, 3 days ago. So whatever's relevant. In this case here, the move started back here on the 3rd. So I would just look from the 3rd to, right, current price. Nothing else before that, of course, unless you're looking for range or daily trend or something. Yeah, exactly. Good. All right, so about, I'll give you till 9:04. I'll give you till 9:04 because I did ask for a lot here. So mark up, again, your supply, your demand, trend, and how you'd have to trade it, along with your key levels. What stock is that? It is MOBX. So start posting it around 9:04. 1 minute. Ten seconds, then you can post them up. All right, y'all, get them posted. Let's see what you got. Heck yeah, a bunch of charts. What we got here? What do we have here? Good. Only thing that I can criticize, I'll criticize it at the end. We'll talk about it at the end. Let me see what we're all doing first, then we'll do a little bit of critiquing. John, do it one more time. It's MOBX, not MLPX. I know, maybe it sounded the other way. This one here, make sure we're looking at the intraday charts as well. You should have your intraday and your daily. Good job zooming out. Hopefully it makes it a lot easier too. Same story here, make sure to zoom out. Break of 113, wait for price to confirm for the range to. So the big task here was, again, supply and demand. And I'm only seeing a few people that noted these areas of supply and demand. So again, the big piece of this, right? We've got to get the hang of marking up these areas. A lot of you did it. A lot of you did it. But I want you to look at this here. From a perspective of how you'd have to trade this. Right, and identifying where these areas of support or supply and demand are rooted from, we can look back here, and I want you to look at what really slaps you in the face on this setup. There's a few pieces here that really slap you. For one, you've got these nasty highs formed through here, and this nasty reversal off this high here. And so what that tells me is we've got a major selling event here and major selling events through here. So I've got sellers here and sellers here. Okay, so I want to analyze and visualize that I've got sellers sitting through these price ranges. Grab that wick. Tiny little candles, grab that full wick. I like to take my outlines off just because it makes it easier for me to show here. Okay. Come on, turn down for me. There we go. So again, take a look. So right now, what I understand, let's do this one piece at a time. Sellers here, I've got supply overhead. Okay, and I've got sellers sitting through here. So again, I've got supply sitting through here as well. Okay. So I know, based on market structure, which we've got higher lows. Okay, so I've got to see, again, this trend hold. I can't see it put in place lower lows. I've got to see it at least hold those higher lows. Right, I've got to see those higher lows maintain. I can see here that we have lower highs, which means I've also got to break out that way. Right, I've got to break out and I can't break down. Right, I've got to break out and I can't break down, and I know that I've got sellers here and here. So that means my only option is to play a breakout for one. So I know for a fact I've got to play a breakout. That is my only option, is to play a breakout. That's it. And so I know, looking at this, I could very simply look for a break over these past highs, watch the price to pull back, confirm out of these highs, Of course, with VWAP and your EMAs trailing below. Entry opportunity after price confirms off the pullbacks. After, of course, breaking out over those highs for the range back up into previous day's pre-market high. And of course, with that too, you also have daily confluence with the break of previous day's high. So this is something there that it's a really, really simple, clean setup to analyze because again, just how obvious these zones are. Now, of course, you could also play the breakout as well, so either one works. Either one works, so long as you have range. But of course, I'm more partial to this down here. It's a little bit less extended, but either way works. Either way works. Could you play the break of trend at 8 a.m.? Back here? This candle here? You see it now? Okay. Good. Before that, which one? This is the 8 a.m. candle here. Let me go back and look. You're looking right here? If you're saying this candle, no, you wouldn't have been able to. This little tiny candle? No, I mean, it would have been tough if you tried to play it this morning because the thing is, this candle popped so quickly. By the time you're able to take any pullbacks, you're right up into that area of supply. So probably not. Or that. Whenever you're saying 8 a.m., what time is that for you? What time? Maybe you're in a different time zone? Right before. So you're talking about this tiny little candle here underneath VWAP, correct? No, there's no way. There's no way because what signs would this have gave you at the time? There is no volume at all. There is no volume at all. So what signs, other than hindsight, right? Other than hindsight, what signs would this have given you to take an entry? Right? Whenever there's no volume, you're underneath the VWAP, right? So a lot of that's hindsight. It's just a matter of sort of trying to place yourself into the shoes of if that was you. You right now, the trend line. Yeah, but you need more confluence than that though. We need to see volume. Right? We need volume. Otherwise, again, you fall into traps. You fall into traps just trying to trade trends. So it's all about confluence. Without volume, you really got nothing. Yep, you really got nothing. Any questions though about this before I move on to something else? Let me know. Good. Largest volume candle 805. Is that an indicator? Where at? Let me go back and look. I also want to point out too, if you're looking back at pre-market, like I think a lot of you are right now, the 7 a.m. candles, 8 a.m. candles, 8 a.m. candles always going to show a lot of volume. On a lot of stocks you look at, and I'll show you back here. Really, any stock you look at, that 8 a.m. candle, this isn't a good example here because that's when this began to move. But most stocks, I'm sure you guys have noticed. Is there anything that hasn't popped right at 8 a.m.? Hold on. See, like right here, big volume 8 a.m. It's just a lot of brokers come online at 8 a.m. You can even see it here, big volume 8 a.m. So pretty much every stock you look at this, even same story here, 8 a.m. Same story here, 8 a.m. Every stock you look at is going to have a big volume candle at 8 a.m. That's just brokers come online. It's nothing that's, stand out or individual to a specific stock. It's everything. Every stock has that big volume candle. If you're just starting, should you trade pre-market? No, no. I don't even like pre-market. I've been doing this for almost 10 years. So no, I don't like pre-market. Typically, I don't. I don't, but today I did. It's very seldom that I do. It has to be a perfect setup if I'm going to trade pre-market. So not really. Not really. But again, it's just a matter of less is more. It's like for me, you go back and you journal your trades. You know what works. You know what doesn't. You know where you make the most amount of money, where you lose the most amount of money. The fact is with pre-market, of course, there's a lot more risk with pre-market. For one, there's a lack of liquidity. With that comes, tougher fills. You don't get good as fills. And with that too, imagine trying to take an exit on something. Of course, you have no market orders to stop yourself out. You've got no stop losses. You've got no way to quickly close a position. And pre-market is one of those times where you can get caught with your pants down, where something starts to knife. You can't use a market order to get out, so you're trying to chase it down at the bid, trying to toss limits on way underneath share price, trying to get the heck out. It can become a nightmare trying to manage risk in pre-market. Now, of course, that doesn't mean there's no opportunities, and sometimes they do come along. But whenever they do, I trade them with smaller size, like I do this morning. I took about a half size this morning on MTEK, and it was a great setup. But it comes with risk for sure. Yeah, it comes with a lot more risk. That's just why I love trading the open. Sure, it can be quick, but in pre-market's just as quick. And gosh, I've seen people in pre-market trying to trade news where the moves happen in less than 10 seconds and then they're done. It's not my cup of tea. It's going to take a minute to be able to see these things without marking them up. How long did it take you? So like I said on Tuesday, there's not really a set time that I can give you for that. There's not really a set time. It's the more you make your watch list, the more you show up every day. And I'm not saying to sit here all day long and watch charts. That's counterproductive. But just to show up every day, put in the work, analyze your charts. You know, whenever you're watching a setup, just be marking things up. Be marking up your levels, marking up your zones, marking up your trends, just marking up any piece of confluence you have. That way you can sort of program yourself to look for these things. That way it becomes second nature. That's the best thing you can do. But with that too, I mean, like I said earlier, whenever you're building these watch lists, I saw very few of you actually mark up these zones on your watch list. So again, make it a habit. Make it a habit. Anything that I look at, I'm always marking up areas of supply and demand. Look at this on BATL. This is from the previous day's watch list, right? We looked at this on what watch list was this? This was for Thursday. Yeah, for today. And again, if we analyze this, let me show you this. We'll break it all down together here. And it's an identical setup really to MOBX that we just talked about. It's really similar. It really is really similar. And what I noticed here is I want you to take a look. We've got, for example, price keeps on trying to sell off. And what happens? It's getting bought up aggressively. Big wick off the low here. Same story here. Pulls back. It's bought back up. Same story. Pulls back. It's bought back up. Okay, so I've got demand sitting through here. Okay, let's mark this up. Let's mark this up. And then through here, I want you to see where price breaks down below. And so this area of demand, right, once it breaks below, that becomes an area of supply, which is confirmed here as it tries to curl and rejects, again, because it is supply. So I want to see the break above, right? I want to see the break above, then look for pullbacks. And so from there, we have range. Let me show you. And if you want to, you can identify we have the break of trend as well. But apart from that, we knew we had range to where? We knew we had range up into the high of its range from the previous day. So we knew we had room to, for one, these highs. And then we had supply sitting overhead as well with this massive wick off the highs. And so with this, I knew that my game plan here was what? I had to look for the breakout of, right, supply, look for price to pull back. And guess what happened today? Look at how this was respected. Look at this. This is from last night's watch list, guys. Breaks above in a strong way, pulls back, confirms off of VWAP. Here's your entry. And guess what? You got a nice little move. So again, but it's like same exact example from MOBX. It's almost identical, really. It's funny how it looks. Look at this. It's pretty crazy how similar they are. But very, very similar setups. Now, I know it's almost 9:20, so what I want to do, just to make sure there's no confusion, because the homework I give you is going to be more centered around supply and demand. I don't want there to be any confusion. I know there's going to be a little bit, but as long as you're able to do it. Do we have any questions about supply and demand, confluence, time frames, anything? Because the homework I'm going to give you, I'm going to get you to do a watch list again, but I'm also going to give you probably a setup or two to identify zones in. Of course, you'll have the whole weekend. So I might get you to do a watch list, of course, for Monday. And then I'll also give you a setup or two to mark up zones. I'll probably do one setup to mark up zones on, and then I'll get you to do a watch list. And then, of course, you'll also do your zones on that watch list as well. But I'm just curious, very curious if you, you know, how that works out going into Monday. But we've got to really drive home supply and demand, supply and demand, supply and demand, because it is the foundation of how I trade. So again, without that, it's hard to be on the same page. So any questions, again, let me know. I try to save some time for the in here for that. Of course, next week, we're also going to be moving on into the next subject, which is more so on risk management. We're going to pull up a sim, and we're going to trade some stuff on a sim next week. That's the goal. And then after that, we're going to talk about setups I typically trade, opening range breakouts. Let's just say we'll trade some examples of supply and demand pivots, opening range breakouts. Let's just say we're playing a VWAP reclaim, a whole bunch of other examples. We'll be doing that in a sim together at night. Trade those together, break down strategies for managing risk, taking profits, whole 9 yards. Can it be subjective? Well, everything technical can be subjective, but there's also a level of objectivity too. Like, if you mark up something that you say is supply or demand and it's just is so clearly not, that would be objective. But if it is something that you can see and it's logical, then it could be subjective for sure. Most things in trading is subjective, but you've also got to put your head into the mindset of what a majority of traders see is that's what's going to actually pan out. So you don't want to be too subjective, right? You want to do what a majority of people are going to see. So something that's more obvious is typically better. Can I do TURB for today? Yeah, what do we have on TURB today? Good example here as well. Let's check this out. Supply sitting all through here. Look at this. Reversal off the high. And then it keeps on trying to break out here and obviously failed to do so later in this afternoon. Look at this. Absolutely disgusting. Holy cow. This is kind of a weird one. Price action here stunk. It looks good for tomorrow because there's so much volume here in after hours, but this action here through here was terrible. This is terrible. I mean, it worked. You know, you got a pivot here. It broke out over the previous day's high. It did pull back and give you an opportunity. And it made a move here. It really did give you a move from 330 to about 370. So a significant move. Of course, you would have taken a full profit and just taken a full exit as it rejected back underneath this high when it failed to follow through. But it did give an opportunity, I suppose. Price action just terrible. Yeah, price action terrible. Good luck for tomorrow, but that was nasty. That's why it was weird. Yeah, it is weird. It is weird. For sure. But no, yeah, it looks good for tomorrow, no doubt. It is a great look. On candles with no bottom wicks, I assume you can tell if buyers are still there by the time and sales. That's correct. Time and sales in level 2. And that is something, too. I know I've been asked this as well. Time and sales level 2, that'll be touched in a couple of weeks. That's the most advanced, one of the more advanced things we get into in terms of reading price action. And helps a ton. It helps a ton. Time and sales level 2, they help you with not only taking better trades, but also holding your trades longer, too. They sort of give you what I call intra-trade confidence. It's yeah, very helpful. But that'll probably be in the next 2 weeks or so, would be my guess. If I had to take a wild guess, I'd say about 2 weeks. But yeah, so that will be that. Any other questions, let me know, though. We've got a couple minutes left before we wrap. Hopefully a good day tomorrow, though. And again, like I said earlier, just what I want you to try tomorrow, Monday, Tuesday, before we see each other again, is to just, if you don't feel that fuzzy feeling when you pull something up and you just feel like it's a perfect setup, like you have to trade it, I don't want you to take that trade. I want you to, whenever you pull it up, say, what would Kev do? Don't take it. Don't take it. If it's not perfect, don't take it. And I just want you to see how things change, even if it means you're taking one trade a day, no trades some days, 2 trades, whatever it is. Less trades, only the trades that you have confidence in, and just trade them to the very best of your ability. And the fact is, the ones you have that confidence in are the ones you're going to trade to the best of your ability. You're going to take proper size. You're going to execute properly because you've got actual confidence. So it's night and day. You know, it's night and day. That's what I want you to do. Because on Tuesday, I'm going to check back and I'm going to ask y'all, I'm going to say, did you do it? Did you stay picky? And I want to know how you did. No conviction today. And that's okay. If you don't have conviction one day, just don't take a trade on it. Yeah, just don't take a trade one day. It's okay to have a no trade day. Nothing wrong with that. That is normal. You can't force conviction, though. Do you think 24-hour markets will change the way we read normal market hours? It won't. No, because, see, and that was a big thing that people were sort of worried about for a while. There's a lot of fear spread online, a lot of misinformation as always. But, so the only difference is it's going to be like a extended pre-market and after hours. There's still going to be an opening bell. Same schedule. You know, the only difference is things are going to trade all through the night. Of course, that doesn't mean people are going to... You got to think from a company's perspective, they're not going to drop news at midnight. They're not going to drop news at 2 a.m., right? Because whenever a company drops a positive press release, they want the largest reaction possible. You know, so they're going to drop it when people are awake. You know, brokers are all online. 7 a.m., 8 a.m., 9 a.m. And so you're still going to get the same action at market open. The only difference is just just the market won't close at night, basically. I mean, it will close, but it's still going to be, you know, after hours pre-market. So everything else is staying the exact same. Sometimes you have stocks on the watch list that you don't see on FinViz. That's from, you might remember, that's from the top gainers, y'all. That's from the top gainers. So your after hours movers, because you see, FinViz doesn't show you after hours or pre-market movers. So whenever you're building out your watch list, you go through here and you can actually go through and see what stocks are moving in after hours by hovering your mouse over the top gainers. And what I would do is whenever I go through with my notepad at night, writing down my setups that I'm looking at, my stocks that I want to look into, and I hover over and I'm going to mark up all the setups that have volume and look to have a chance to continue higher. Like TURB, I'm going to say, okay, well, this thing's up, okay, 58%. I'm going to write this down. I'll come back to it. Any, okay, this thing's up about 58%, still holding its highs. I'll look at this as well. GBR, also coiling. Okay, I'll look at this too. And I'll just pull them all up individually afterwards whenever I do my full plan. Like PLBL, no thanks. Egg, no thanks. Like all these just look like crap. But, you know, the ones that look interesting you can add to your list. And you would, again, plan for them the same way that you would anything else. So just make that a habit too. Start on FinViz, then work your way down. Work your way down to the after hours movers, but that's why. No, that's just Webull, guys. That's all Webull. Just go to Webull and click on the little markets tab here on the left side. See how it says markets? And it's all just right here. Yeah, it's all just right there. Comes with it. So do your regular scan on FinViz, then look for after hours on Webull. Yeah, like I said, FinViz is not for pre-market or after hours, so you would use Webull for that, the top gainers. You can also use as well the WAP. If you go into the WAP, there's actually, let me show you. Let me show you. Look over here, top gainers. Check this out. And you can actually see all your top gainers too. Like right now it's showing Turb up 80%. And you can just go through here and of course it shows you as well your daily leaders. But I would just make it a habit to use Webull. Use the Webull top gainers. Can't you filter? I don't think you can, but the stocks that are up big, I mean, you can just pull them up and look at. There's usually only a couple. I mean, there's a couple like TURB, NE, GBR. Pull those three up, look at the floats. You know, you can filter by market cap, but, you know, that's about it. Yeah, so I would just do this. It's what I do. Takes you 2 seconds. You pull up the top gainers. You can see what's moving in after hours. There's typically only a few that look fruitful. add them to your list, and that's where those would come from. Like my TURB from the watch list tonight, that's where that came from, is right here. Yours are different. What do they show? Make sure you've got, let me show you. Let me show you. Make sure this says after hours, because it might say 1 day. So make sure it says after hours or pre-market or whatever you're looking at. Make sure it says that there, and it should show you the right stocks. You see them? Okay, cool. Cool, cool, cool. But yeah, so just do that. After your Finviz scan, pull it on up. You can look at your after hours movers and plan on those as well. Have to use after hours. I gotcha. All right, y'all. Well, another fruitful class. Hopefully you take something from it and you can go into tomorrow and use some of it to find some good entries out there. I'm hoping tomorrow's a pretty good day. Today was good, fun. Hopefully tomorrow is even better. Hopefully longer lasting opportunities. Of course, it seems like lately it's like we've been done in like 30 minutes. So we'll see what we get. Hopefully a nice way to end the week. Of course, homework I'll get posted up tomorrow. Market close, I'll get it posted up. So be expecting that. And all that said, again, like I said, only trade the most obvious setups. If it slaps you in the face, if it doesn't, don't trade it. Try that till Tuesday. I want to know how you do. Y'all be good. All right, see y'all tomorrow.